By 2035, our country is forecast to be the largest data center market in Southeast Asia. This one is according to estimates by Morgan Stanley. Yeah, we're going to make up two-thirds of the data center market, well ahead of our peers such as Indonesia, Philippines, Singapore, as well as Thailand. Now, global investors, those big names like Google, TikTok, Nvidia, Microsoft, have all invested billions of dollars in Malaysia, specifically Johor. Yeah, according to media, foreign investment in the southern state rose 580% from 2019 to 2022 to 58.8 billion ringgit. And in the past year alone, TikTok, they have plans to invest 10 billion ringgit to set up an AI hub in Malaysia and another additional 1.5 billion ringgit allocated in Johor to expand its data center facilities. Then we also have Nvidia and YTL. Yeah, for those of you guys who are wondering why YTL shares have surged recently, it's because of this reason over here. They've sealed a major deal of 4.3 billion US dollars to develop AI infrastructure in Malaysia, and the project will be hosted at a data center in Johor. Then we also have EcoWorld, yeah, selling land in Johor to Microsoft, which will then be used to develop a data center site over the next 4 years. It is part of the tech giant's 2.2 billion US dollar investment in cloud computing as well as AI services in our country. So let's step back a bit and talk about what data centers actually are. So think about all your storage systems. Yeah, these days, a lot of people are storing data on the cloud. So all of this data has to go to a physical location somewhere, and these are your data centers. Yeah, they will host your networks, your servers, your storage drives, so on and so forth. And this is why they require lots of space, energy, as well as water for cooling. And why are foreign investors choosing Johor? Well, the reasons are quite obvious. We already tick the first three boxes. We have lots of space, we have lots of energy, we also have lots of water, right? We supply water to Singapore, in fact. And the fourth reason, our king, aka the Sultan of Johor, is very investor friendly. So we've managed to spur investment by cutting approval times from previously 2 to 3 months to as little as 7 days. Whereas in Singapore, right now, if you want to construct a data center there, you got to wait at least 3 years. Yeah, they have implemented sort of like a delay system now, okay, because of their limited space as well as resources. And another major reason why foreign investors are choosing Johor is because of our proximity to Singapore. Yeah, our land is significantly cheaper, and that's why you see all of the tech parks as well as the data sites. They're located close to Johor at the southern part, and it's extremely close to Singapore. Which companies have benefited from this? Well, the Naga National number one, Inari, we also have YTL, as well as Telecom. So Tenaga National, this one goes without saying. Construction of data centers will increase the demand for power, which is expected to raise TNB's capital expenditure, capex for short, to 90 billion ringgit by 2030. This is expected to increase its earnings as well, which is why you see the share price surge since the start of the year. Then Inari, this one is a semiconductor company. That goes without saying also, right? Construction of data centers will also lead to an increase of demand in semiconductors. Then YTL actually has two companies. One is YTL Corporation and the other one is YTL Power. Both have surged significantly since the start of the year because this company has managed to secure multi-billion dollar deals with not just tech companies but also Singapore Changi Terminal 5 and also multiple MRT projects. And finally, Telecom over here. Okay, so construction of data centers, you need a lot of Wi-Fi, you need very quick internet connection, will increase demand for fiber optics, which is expected to drive up TM's profitability. So apart from data centers, Malaysia may also be the next global chip giant. The Malaysian Semiconductor Industry Association, Msia for short, I know, quite a good name, right? They're aiming for 1.2 trillion ringgit in semiconductor exports by 2030. This represents a compound annual growth rate of 7.6% from its current export value. So if you're wondering how big our semiconductor industry is right now, it's actually massive. Okay, Estimates vary, but we are like the fourth largest to the seventh largest exporter of integrated circuits in 2022 as well as 2023. Yeah, we are well ahead of major countries such as Japan, Philippines, and even the United States. So in 2023, we exported 1.426 trillion worth of products, and most of it goes to electrical and electronic products, mainly comprising of semiconductors as well as integrated circuits. So we're not really an oil nation, okay, so to say. We do export a lot of oil products, but it doesn't really compare to our exports on E&E products. Okay, in fact, there are estimates saying that semiconductors make up about 5 to 7% of Malaysia's GDP in 2022 as well as 2023. So our country, why is it a hotspot for semiconductors? Well, the first biggest reasons is the rising tensions between US and China. Okay, it's forcing companies to diversify their operations, and we are sort of like the middleman because we are located smack bang between the middle of these two countries, so to say. Intel, GlobalFoundries, Infineon, Nvidia, like I mentioned just now, these are some of the chip makers that have already set up operations or are planning to set up operations in Malaysia over the next few years. And why is this the case? Well, well-established infrastructure, 5 decades of experience, back end of the semiconductor manufacturing process. Yeah, we have the facilities also, right? Assembly, testing, packaging. Most importantly, we also have the land. Here are the list of tech companies listed in Bursa, Malaysia. So you can just do a simple Google search and you'll be able to come up with the same list as me as well. But when it comes to picking the right stocks, right, you can use the 5-point checklist that I always talked about. Check their net profits, profit margin, asset versus liabilities, see whether they have more assets compared to liabilities or not, and then also check their historic share price. So next, moving on to the oil and gas sector. Okay, so research firms, they are pretty positive about Malaysia's oil and gas sector, but not on Petronas because recently Petros or Petroleum Sarawak, the state-owned gas company, is planning to take over all of the natural gas trade in Sarawak from Petronas. So this is obviously bad news from Petronas. According to estimates, the gas sector contributed about 30% of Petronas's revenue. So why is this the case? Yeah, why is Sarawak planning to go independent and take over its oil resources? Well, this one is quite a long story. I wrote quite a long thread about it on X a few days ago. But cut a long story short, Petronas, they have paid dividends to the government annually, about 40 to 50 billion ringgit. But despite this, Sarawak being one of the largest suppliers of oil and gas to Petronas, they do not receive a single cent of the annual dividends from Petronas. Yeah, that's why they're planning to go independent, take charge of all of the natural gas within the state. And all of the payments from Petronas goes to the federal government, used to cover subsidies, mainly benefiting the rich. And because of this, because of Sarawak's takeover, right, shares of Petronas's listed subsidiaries. We have Petronas Dagangan, Petronas Chemicals. These two have fallen by 11 to 22% in the past 3 months. And Petronas Gas, well, investors, analysts, they're not really optimistic about it. Next one, let's talk about unit trust funds. If you're an active Versa user, you may have seen a new option or a new fund called Versa Japan. It is an aggressive fund that allows you to invest in familiar names such as Sony, Toyota, Mitsubishi, as well as Hitachi, right? 1 year return looks pretty impressive, 17.16%. And year-to-date returns also not bad, 8.42% in the past 7 or 8 months or so. But when it comes to analyzing and picking the right unit trust funds, right, you must always dig deeper and look into the fund's prospectus. Okay, so let's have a look at the historic returns. The fund is in MYR. You can see that 1 year 17.2%, but since inception, the fund was created in 2018, the annualized return is only 5.4%, which means the returns is actually lower than EPF. EPF's 5-year annualized return is 5.52%, but for this fund, it's 5.4%. In fact, it is almost 2 times lesser compared to the benchmark. Benchmark is 10.6%. So always check the fund's prospectus, have a look at its historic share price. In this case, the biggest reason for this fund's, I would say, underperformance is the decline of the Japanese yen over the past 5 to 7 years. You can see JPY versus MYR over here has declined by almost 21%. And even when the index has appreciated by over 75%, well, obviously due to the depreciation of the Japanese yen, it has eaten into quite a lot of profits of the fund itself. Now, when it comes to the top holdings of the fund, well, as advertised, yeah, you get to invest in familiar names, Mitsubishi, there's Toyota, there's Hitachi, there's Sony, and there's also another Mitsubishi over here. 92.5% of the fund is invested in Japan equities, mostly growth companies, and the remainder is in cash. Okay, so how to get started, how to invest in this fund, you just take a look at your Versa app, tap on manage, select cash in, and you'll be able to explore all of the different types of funds that Versa offers. So a quick disclaimer, for tonight's purposes, I'm not sponsored by Versa to talk about their fund over here. Yes, I'm currently an affiliate of Versa. They do pay me a small amount every month to talk about their funds, but tonight I'm not sponsored by them. This one is solely based on my own opinions. With the downtrend of the semiconductor market this past week and the political tension of USA and China, should it pose as a caution before investing in semiconductor related stocks that you have mentioned just now? Actually, I don't think it's a risk, In fact, I think it's an upside. Right? Remember, I talked about it just now. Specifically because of this US-China tension, right? Companies worldwide are right now diversifying their operations. And fortunately, Malaysia is among the top list, or at least the top, okay? So that's an opportunity. And another one is the recent drop. This one is entirely normal. Yeah, retracements in the markets is always expected, especially when you see the S&P 500 index, right? It has rallied by so much in the past year alone. Definitely, we do expect a bit of retracement sometimes. And the reason for it is due to missed earnings. Okay, so every quarter, companies, they will post their earnings. And as the market gets more and more optimistic, right, they expect more from these companies. And if they miss their earnings, like for example, Tesla, I'll show you the chart of Tesla, okay? It has fallen by 10 to 12% due to its missed earnings. And that has obviously dragged the entire index or the S&P 500 index lower. Okay, so I don't think this poses much threat in terms of the companies in Malaysia, but it's just a temporary retracement because of missed earnings. Shout out to all our Gather members: Andrew, Wendy, Edward, Alex, Sissy, Iz, Urshad, Caveman, Calvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Rizan, Hudson, G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Hazik, Jinden, Adam, Adrian, Ashley, Sean, and Jason, as well as all of our learner members. Thank you guys so much for joining. I will see you guys in the next session next Sunday, 10 p.m. Alright, guys, stay safe. Good night.